Are the easy days of making money in crypto over? Look, it's fair to say that the crypto cycle has not been playing out really in the same way as previous cycles. There's a lot of similarities, but there's also some interesting things like Bitcoin making a new high before the Bitcoin halving that are not characteristic. And the ability of a great investor to adapt to new conditions is critical. Most valuable of all, to identify asymmetric bets while they're still, well, asymmetric and not consensus. So today I'm going to ask the big question, even if we don't like all the answers, are the easy days of crypto money making finished? Plus, we'll figure out what to do if so and why, actually. There's plenty to be positive about either way. So first, why does it look like the easy days are kind of over right now? Well, to answer this, cast your mind back to 2021 when we had the kind of crazy altcoin season where everything goes up like bananas. NFTs creating new brands, creating a crossover between art and crypto, buyers actually holding on to crypto assets for more than like a few hours. Crazy idea, I know, not just getting in, watching it go up for a few hours and insta dump it to zero. People believed in things back in my day, people believed in things they held. More than just for an overnight flip anyway. There was excitement for the metaverse, for on-chain collectibles, for DeFi, for blockchain gaming, and of course at the top of the pile, Bitcoin itself, which seemed to be on the verge of both corporate and nation-state adoption. And while Bitcoin has done very well this cycle and continues on those narratives of corporate and nation-state adoption, a lot of the other stuff has fallen by the wayside. Financial nihilism took off with meme coins and all the rest of it. Big VC coins getting slammed. For sure, look, some of this stuff sounds a little bit crazy, a little bit delusional, but the energy back in 2021 was very palpable. If you go back to 2017, it's a similar story. Real belief in Bitcoin, real belief in Ethereum. We're doing big things with big ideas. All kinds of other altcoins appeared during the ICO bubble, but some of those things were really big things like Chainlink and Aave. They came out of that. For that, of course, Bitcoin itself was the novel technology associated with cypherpunks and financial outsiders and containing the potential to disrupt the entire fiat banking system globally, which it's now kind of doing, interestingly. So that was all exciting, and it's also meant that in terms of cold hard cash, the upside on the table was absolutely astronomical, and people made more money than they knew what to do with, because this was entirely new and novel technology, an entirely new industry, spun up from nothing with no barriers to entry. So it could and did expand very rapidly and reflexively with nothing but thin air as resistance. But the reality, those conditions can't last forever. Crypto's kind of growing up a little bit. It's not the baby it once was. Fast forward to 2025, everybody and their mom at least knows about crypto if they don't own it, including the bubbles, the trends, the massive crashes, the 4-year cycles, the Bitcoin halvings, the NFTs, the crime, the vast graveyard of now defunct bullshit tokens. So I'd like to thank today's sponsor, Kernel DAO. Now, this is a restaking powerhouse. The guys over at Kernel are letting you put your assets to work to earn some very insane rewards. Kernel has over $2 billion total value locked across their two main products, Kelp for Ethereum staking and Kernel for BNB staking. Backed by big players like Binance, you know they're not messing around. So you can restake your BNB to earn BNB pool rewards on Kernel and restake your ETH on Kelp to earn yield and points. Pretty cool. And if you're holding the Kernel token, then you'll have even more money coming your way because there's a lot of airdrops that are confirmed already. We have Mira, which is an AI coprocessor. We have YieldNest, which is a liquid restaking protocol. They've allocated about 1% to 2% of their token supply to Kernel token holders. Pretty damn cool. Now, if you want to learn more about what they're doing, find out ways that you can stake your Ethereum with them, your BNB, or earn some airdrops from Kernel, well, there's a link down below where you can learn more and start putting your assets to work, earning you some passive yield today, which honestly is not a bad option to do considering current market conditions. So if you're waiting out the storm to blow over, may as well earn some passive income while you're at it. Go check it out. Link down below. Thank you for supporting our sponsors. So let's get back into this. Bitcoin's price action is not necessarily following the previous trends. Bitcoin is, of course, alive and thriving and very valuable and has been the best asset of the cycle, really. But take a look at this chart here from COINTRACKING. It shows that after the fourth halving, that's the most recent one, Bitcoin has not increased in price at a similar pace to previous cycles. And this is the diminishing returns theory. If it had, it would now be trading at around $250,000 or higher. Well, at the time of recording, it's just currently in the $80,000 range, well below the lower boundary of the historical price range presented here. So Bitcoin has stalled, but should we be surprised? Arguably not, as Ecoinmetrics also points out, Bitcoin has evolved into a macro asset. It's all about Wall Street now, baby. The halvings just really aren't as significant as they used to be. Times are changing. Again, Bitcoin's growing up, crypto's growing up. My little boy is such a big guy now. Again, When that kind of shift occurs, from 0 to 1, from real-time experiment to macro asset held by Wall Street ETFs and becoming a strategic reserve asset of the United States, you can't expect the kind of rocket-fueled price insanity that you got in the initial expansion period when the early believers were the first ones to show up. Now everybody kind of believes, at least in Bitcoin. As for the rest of crypto, it's always followed and depended on Bitcoin. When Bitcoin soared, Ethereum and altcoins stepped up next, but if Bitcoin is now behaving more like a regular, established, boring Wall Street asset, can we really expect that those easy money altcoin bubbles are still going to occur like they used to? By the way, these kinds of explosive but not endless gains are not unique to crypto, as investors have ridden exactly these kinds of waves before, many, many times. We have the dot-com bubble, right? The housing bubble, software as a service bubble, fintech bubble, AI bubble now, other bubbles. Bubbles. That being said, crypto's been the most entertaining and sometimes most outright insane of them all, and it's a casino that keeps on giving. It's just that it's more mercenary now, and the opportunities are fewer and farther between, and you have to be much more rotational and ready to just ruthlessly take profits on stuff. Believe in nothing except the cold, hard dollar. So what should you do in these conditions? Well, in short, investors need to adapt to secular changes more quickly in order to preserve capital and take new bets when conditions are optimal, which means not getting trapped in old patterns and ways of thinking, something I still struggle with as an investor. I want to hold coins, but I'm getting punished for it constantly. You have to also look out for new openings. One such opportunity may be humanoid robotics, for example, summed up neatly by Andrew Kang of Mechanism Capital recently, who posted that this field is similar to Bitcoin in 2013 with a larger target audience market. Okay, it's true. Going to be probably one of the biggest trends in the world in the next 10, 15 years. He's also talked about positioning now with maximal exposure. And reinforcing that assessment, there was a reply from Elon Musk who stated that it was all super obvious. It's hard to get exposure though. Bitcoin's easy to get exposure to. Getting into private market rounds on the next big AI stock is really hard. That brings us back to the question of how to allocate to asymmetric bets. The most obvious way would be to buy Tesla stock in this situation. Some other interesting companies would be Figure, Agility Robotics, Aptronic, but problem is none of this shit's traded publicly yet. So you need to be an accredited investor to hopefully gain exposure by buying somebody else's private round investment. Alternatively, there are some ETFs to consider, things like the Global X Robotic and Artificial Intelligence ETF. I know what you're thinking, Lark, what the heck are you doing talking about robotics and ETFs, man? I thought this was a crypto video. It is. So stick with me for a second, because the point is here is that there's a lot of ways to make money. And if you're focused solely on trying to flip meme coins or whatever, you might be missing out on some big gains, okay? Because big things are afoot, and crypto is maturing, but there's other industries that are newer and more nascent and are going to be absolutely massive as well. Not to say crypto is not going to keep going up. Bitcoin's going to $1 million, guys, in the 2030s. It's 10x, not bad. I guess it's 12 or 13x from current prices. Anyway, so you got all these robotics ETFs and stuff, but you might see some negatives here because compared to crypto, there's a lack of access. One of the things I've always loved about crypto, anybody, anywhere can get in. Robotics, pre-market stuff's highly gated right now. On the positive side, though, even just focusing on Tesla, you're investing in products that make immediate sense and have a vacuum in which to expand. But without the out-of-control asset saturation that you find in crypto, thus far anyway, I'm sure we'll have a robotics stock bubble that heats up and goes absolutely bonkers with hundreds of Chinese companies and hundreds of American companies. It'll be nuts, you'll see. That all being said, let's not forget, crypto's not over, okay? There's lots of great asymmetric bets from space tech, humanoid robotics, artificial intelligence companies, biomed, all that kind of stuff. But crypto itself is not done. In fact, you can get exposure to all these things in crypto as well. It's just that you know, token economies. You don't actually own any shares in a company or anything like that. It's much less certain how you're gonna make money. But going back to 2021 again, Bitcoin experienced a huge bull market dip, creating a double top for that cycle. And we can't write off the current cycle yet. In fact, I don't write off the current cycle yet, although there are reasons to be paranoid, let's say. But I think for the most part, on the macro front, there's a lot of good stuff happening. The Trump administration has openly communicated that, yeah, we might see some short-term pain, but long-term gain to the economy. Okay? Markets just generally keep going up over time, even if there's some hiccups along the way. While there's the prospect of the Fed ending quantitative tightening in the nearest future. They're already reducing it. They might even end it by May or June. Also, it's when crypto looks most down and out that the best risk return ratios are present. There's a lot of great shit happening in crypto, a lot of great companies, a lot of great DeFi protocols, good buybacks and good dividend protocols, a lot of good blockchains that are seeing soaring adoption. There's good things happening in this market, and a lot of those assets are on sale right now. Crypto has an amazing tendency to suddenly spin up new bullshit narratives out of nowhere that make everybody fucking rich if you can get in early enough. And for traders, man, crypto continues to offer profitable setups. The volatility in this market is bananas bonkers zone. And you can make a lot of money if you have the right skills to do it. And trading platforms are improving all the time. It's a pleasure trading crypto. So absolutely, you should look out for the next big play. But remember too, that whenever it's been left for dead, crypto has always come roaring back. And the sentiment right now is pretty damn bad. Not to say sentiment can't get worse, not to say prices can't go lower. They always can. But crypto will remain one of the highest returning markets for at least probably the next 10 to 15 years. And yes, returns are diminishing. And yes, it's getting harder to find ways to make profits. And yes, you're not going to be able to do the same things you did in the past and just buy random bullshit and watch it go up 100x. You're going to have to be more selective. You're going to have to work harder. You're going to have to lock in. You're going to have to make yourself an expert on this industry, which most people aren't willing to do. They just want to go and find a YouTube video, find some guy on the internet, tell them what coin to buy, and then run off and buy it with zero fucking conviction, and then be surprised when it doesn't work out. The investors right now who are locking in, who are in the Telegram groups, who are in the Discords, who are getting information, who are signing up to all kinds of premium information services and stuff like that, those are the people who are going to win absolutely massively. They're in DeFi early. They're getting big airdrops. They're finding coins early. Okay, it is a very asymmetric market outside of, let's say, Bitcoin still, a 10x return for Bitcoin over the next 10 years. Still not bad, but it's still a lot of asymmetric return potential in crypto, but it's much more selective, and you have to be more selective than before, and you have to be willing to mercilessly cut and take profits when you get it on the table because the rotations are faster and more intense than they've ever been before in this market. Thanks for watching. I'll see you next time. Peace.